Is the property market going to crash? Are property prices going to crash? We've all seen that property prices are coming down and interest rates have gone up. Mortgage interest rates are higher than they've been for a good few years. So we've got landlords that are worrying about property prices, worried about losing their properties. We've got property investors worrying whether it's a good time to buy or should they wait and see what property prices do. And then everybody is wondering what's going to happen with mortgage interest rates and property prices. So I'm going to go through those three things. I'm going to talk about landlords, what you need to know about property prices, whether they're going to crash, whether they're going to go up, go down, and property investors. When is it going to be a good time to buy? Is it a good time to buy now? And for everybody, what I think is going to happen with mortgage rates and property prices. Plus, at the end of this, I'm going to tell you an awesome story about a friend of mine who managed to get the most ridiculous mortgage interest rate for the rest of his mortgage term. So first of all, I know you've all been waiting to hear what Tom Soane thinks about the property market and mortgage rates and so on. But, I thought I'd share my thoughts anyway. But I do think that property prices this year in 2023 are going to drop. But don't worry. I think the drop is going to be 9 or 10% across the whole country. Now, that doesn't mean that you all need to worry about it, because really what we're doing is going back to 2019 and the prices that we could see back then. Definitely, whilst you're looking through property prices, historic sale prices to work out what you think property prices are going to do, don't look at 2020, don't look at 2021, don't look at 2022, and don't use any of those years as guides to estimate or forecast for yourself. Those were a few freak years. We had lockdown, we went through COVID, we had all of that rubbish. But for some reason, property prices just rocketed. In fact, that was some of the fastest property price increases that I've ever seen. And I've been doing this for 23 years. So don't use those few years as a guide. In fact, ignore them completely. I would use 2019 as your starting point because that's where I think property prices are going to get back to. So yes, property prices are coming down, but I want you to remember this. There's always been ups and downs in the property market. And the reason for that is because we're always dealing with some crisis somewhere. We're always dealing with economic challenges, things that go crazy in this country. And that's just life. So the reason we've always had ups and downs is because this is no different to any other time in history. Sometimes we're up, sometimes we're down, sometimes it's in the middle. So first of all, landlords. I want you to try and think long term. You're probably worried, maybe a lot or a little, about what's going to happen in the short term. But try to remember what I just said. Property prices always go up. Property prices always go down. But that's the short-term view. They go up, they go down, but over the course of 25 years, you like to think that you're going to see an overall increase or at least get back the same value as you bought it. I mean, you'd have to have a pretty bad investment if in 25 years it's still worth what you paid for it, but, I've seen it happen. But try to remember, the chances are you're not going to lose your property. If prices drop considerably, your property is pretty safe. And there's a few reasons for that. First of all, you've got equity in the property, I hope. Second of all, you maintain your mortgage payments. And third, mortgage lenders don't value your property every day. It costs them 500 quid to send a chartered surveyor to value your property. So they're not doing that every day. And they also don't have people checking property prices for your property all the time. Most mortgage lenders have got thousands of customers with mortgages on thousands of properties. They're not checking up on you every single day. Obviously, when you come to the end of your mortgage and you try to renew it, that's when the mortgage lender is going to recheck the value of your property, of course. But then that goes back to other things. If there's plenty of equity, no problem. Yeah, property prices might have come down. You might not have as much equity as you had before. But if you've been looking after your mortgage, looking after your finances, then you should maintain your equity. Your property should have enough equity for it to be safe. It's also really expensive for mortgage lenders to repossess your property. They don't want to do it. Even if property prices come down, and there's a really important bit coming up about that, I'll come to that in a second, but even if property prices come down, it's still mega expensive to repossess your property. They don't want to do it. In extreme cases, perhaps you've overborrowed against a property, and perhaps you've got very, very little equity because you've overborrowed. Perhaps you got away with a really ridiculous valuation. I've done other videos on my YouTube channel about valuing properties. It's very easy to try and squeeze through a really high valuation. Great. At the time you think result, but long term that could cause problems. So overborrowing is a definite problem. And this is the point I was just telling you to wait for. Lenders also think longer term. And I urge you as landlords to think long term and don't worry about the short term property price fluctuations up, down, because your mortgage lenders also think long term. And I'll give you that as an example. If this year property prices are going to go down 9 or 10%, your mortgage lender isn't going to take a knee-jerk reaction to repossess your property. Well, look, I'm saying they're not going to. Obviously, I'm not the law. I'm not the mortgage lender. So don't take that as the absolute gospel truth, but think about it logically. If property prices come down 9 or 10% this year, maybe even they stay there next year. Maybe they stay there for the next 5 years. The mortgage lender is not going to take a knee-jerk reaction and repossess that property from you just because in the short term there's been a dip in property prices. Actually, what they're more likely to do is take a longer term view and see this as a dip. What does the economic landscape look like for the next 10 years? And that's probably more comforting for you to know that not only should you think long term as a landlord, but your lender is also thinking longer term. A lot of landlords are going to worry their properties are going to be at risk. They're going to lose their properties because property prices are coming down. Look, property prices have already started coming down. Not dramatically fast. Actually, like I said earlier on, they're going to come back down to about the 2019 levels. So landlords, look, if you're concerned, then you should work out your options. Hey, it might be a good idea to sell it, but it might also be a good idea to just sit tight and keep your eye on it. So that leads me nicely to property investors. Is it a good time to buy, or should you wait and hang on and see what property prices do in the future? Well, look, you know my philosophy. I've done a few videos now on when to buy a property. They're all on my YouTube channel if you want. Maybe I'll put a link in the comments below to my YouTube channel. Or maybe you're already watching this on YouTube. Who knows? I've done a few videos on when to buy and when not to buy. But for me, it's always a good time to buy. Let me explain. It doesn't really matter if property prices go up or down because you are investing in a property for the long term. You're investing in a property for 25 years, 30 years, whatever. And that could be because you're investing in a property for your kids, for their futures, maybe for just your own financial security. Maybe you're doing it as a pension, or maybe you're doing it for cash flow. Maybe you're doing it for monthly income. Either way, you're investing in the first place. You're buying an investment property in the first place for a long-term investment. You're not doing it for short-term. You don't buy a property today and invest in a buy-to-let property today with a view to sell it again in 6 months. Try to remember the reason that you're investing in the first place, and also remember that your offer or the purchase price is a calculation. It's not a guess. You're not just looking at other properties and thinking, oh, let's see what everyone else is doing. Yeah, I'll just offer that. No, it's got to be a calculation, and you've got to stick to that calculation. So for me, for an example, I base my offer. If I'm going to buy a property, I base the offer on the return on investment, not on property prices. I don't look at that when I'm calculating how much that property is worth to me. And that's the key phrase. How much is that property worth to me? And I look at the rent valuation. I look at the current mortgage rates that are available to me. I look at the fees that I'll have to pay out in order to own that property, insurances, management fees, everything like that. And that's how I calculate the return on investment. So that's why I say it's always a good time to invest, because really it doesn't matter what property prices do. Whether property prices go up or down is irrelevant, because the only thing that should change is your offer. So if property prices come down, fine. The rent valuation, calculate that, then work out what that property is worth to you based on that rent valuation, the fees you have to pay out. Now, of course, you're not going to overpay for a property. Well, I hope not anyway. But try to remember the long term. Remember why you're investing in property in the first place. It's for 20 years, 25 years. So try to stick to that. Calculate your offer. Don't take a guess. And don't worry too much if property prices are going to go up or come down. So the next part to that is, should you wait for property prices to come down before you buy? Well, you could, but think about how many other people are doing that as well. Think about all the people in the country that are thinking, I'm just going to wait for prices to come down and then I'm going to pick up a property at a really low price. Well, that never really made sense to me, for the reason being that if in, 10 months' time, prices have come down by 10%, well, all prices have come down by 10%. So again, going back to what I just said, you're not investing in a buy-to-let property today to then sell it in a year's time. You're also not going to wait 10 months for property prices to come down by 10% in the hope that you're going to buy it cheaper and then be able to sell it for an absolute ridiculous amount of money in 6 months after that. That's not how property investing works. But also it's relative. Property prices are coming down right now because mortgage rates are going up. And when mortgage rates go up, less people can buy a property because less people can afford the repayments. Therefore, there is less demand, and therefore property prices have to come down until people can start affording the properties again. And that's just the way it works. Simple as that. Yes, you might be able to get £15,000 off the property price that you would have paid 6 months ago, but your mortgage payments are a significant amount higher. So what did you want? Did you want to save £15,000 on the purchase price but pay out an extra £200 a month on the mortgage payments? Or did you want to just buy something now and just get on with it? So it's all relative. And what I guess I'm saying is, if you wait, then yeah, you might save 10 grand, but you've also lost 10 months, a year, 2 years of rent that you could have had. So you might as well do it now. You might as well get the money now, make the investment now, because otherwise what you'll have is cash sitting in the bank doing nothing, and you're missing all these potential property investment opportunities. And then when it comes to 10 months down the line, there isn't an alarm that goes off that says, here's the property price's bottom line, here's the point you should buy. There's no alarm that tells you when to buy. How do we know that this is not currently the bottom part of the property price drop? It could be property prices could start going back up tomorrow. There's no alarm that says so. Actual properties themselves don't have big badges or signs on the front of their house saying, this is a really good bargain. You have to figure that out for yourself. Look, I'm not trying to patronize anybody there. I'm just saying that, you don't know when property prices have hit their bottom point. You also don't know when they start going back up again, really, because it happens so slowly. Prices drop so slowly and they go up again so slowly. So again, there's no alarm that goes off that says, right, quick, buy now because property prices are going back up. You can analyze data and you can check the information available to you and make a good guess if you're in the industry and you know how it works. But generally, for the everyday property investor, it's always a good time to invest as long as you get the price right and as long as you get the right return on investment. By the way, I'm not a mortgage advisor. If you want mortgage advice, speak to a proper mortgage advisor. I'll connect you with mine if you want. The one that does my mortgages for me is extremely good with buy-to-let mortgages. That's what he focuses on. So let me know. I'll connect you up with him. The next part, which is quite interesting, is what are mortgage rates going to do? Look, the first thing I want to say is you can forget about these 2%, 2.5%, 3% mortgage rates that we've been seeing for the last few years. They're gone. If you made the most of that time, like I did, brilliant, fantastic. If you didn't, don't worry, they're not coming back again. You don't need to worry about it. And the reason for that is, first of all, of course, the Bank of England base rate can't stay at 0%, 0.5%, 1%, even anywhere around that. It can't stay that way for long. It's impossible. The country would be in a disastrous situation. So a lot of mortgage lenders are linked to the Bank of England base rate. That means that all of those mortgage lenders are linked to that rate, and then they make their profit on top. They have to cover their costs, but they also have to protect their risks. So if they're borrowing money from wherever they're borrowing money from at a really low rate, and then they're adding their profit on top, a bit more to protect their risk, then you're going to get really good rates. When the Bank of England base rates go up, then all other rates go up, then all the mortgage lenders go up. And that's where we are now. So you have to try and think of it from the root. The Bank of England base rate has to be at a rate that is really sustainable for the country. And therefore, I think that we have now seen the worst of the rate increases. Now, that's not to say it's not going to go up. That's not to say it's not going to come down. I'm just saying that I think we've seen the worst of the rate increases now. I don't think there's going to be huge changes from now on for at least the near future. I also think that we're going to see mortgage rates settle at around the 4%, 4.5%, 5%, that sort of area. I think that's where they're going to settle, at least for a few years. Again, it might be a little bit more, it might be a little bit less, but that seems logical to me as to where they're going to stay for the near future. If you're thinking about investing in property, or you're currently a landlord and your mortgage is due for renewal anytime soon, then you can use that as a bit of a guess of what you could be expecting with your mortgage payments. Now, obviously, you're going to have higher interest rates for unusual mortgages or for if you've got bad credit or anything like that. Buy-to-let mortgages are normally more expensive than residential mortgages. So again, I'm not a mortgage advisor, by the way, so don't take any advice that I'm saying here today as mortgage advice or financial advice or investment advice. I'm not qualified to do any of that. But I do think that my experience as a property investor, as a landlord, but also I own multiple letting agents around the South Coast, and I've been in property for 20 odd years. I can kind of make educated guesses. Let's just call it educated guesses about what I think is going to happen. I wanted to end this piece with a really cool story about a friend of mine. I'll start by saying that a year ago, my friend had 10 years left on his mortgage and his fixed rate was coming to an end. He approached the mortgage lender and said, "What can you offer me?" Now, the mortgage lender offered him a 2-year fixed rate and a 5-year fixed rate. I connected my friend up with my mortgage advisor who went around the lenders. My friend was offered tracker mortgages, variable rate mortgages, a couple of different fixed rate mortgages. But then my mortgage advisor went to him and said, and I'm smiling because, I don't know, this is not even funny. I'm such a geek. But my mortgage advisor found him a fixed rate for the remainder of his mortgage. And get this rate. 2.09%. 2.09% as a fixed rate for the rest of his mortgage. Unbelievable. The beauty of that story is that my friend took a bit more on top of that mortgage. So he took a bit more cash out of his property, used it to improve the property. So he's increased the value and he's paying 2%. Well, 2.09. 2%. Unbelievable. And that's the rate he'll pay now until that mortgage is completely paid off. What an awesome story. And that's what I call the everyday person. He's not a property investor. He's not a landlord. He's not involved in property or investing. He's just a regular person. And that's what I call taking advantage of an opportunity. I'm really chuffed for him and he's done well there. Let me know, have you got any unbelievable rates that you're going to stick with now forever? Don't forget to subscribe to my YouTube channel. I do lots of different videos on the YouTube channel that I don't do on Facebook, LinkedIn, Twitter, Instagram, podcast, and all of those places. So make sure you subscribe to my YouTube channel. Or if you're a landlord and you want to talk about letting your property, managing your property, or both, and you're down on the South Coast, then do let me know. You can contact me by email. It's tom@soanegroup.co.uk. Or you can contact me through my Facebook page, or just comment below and my team will contact you. Or if you're a property investor and you want to buy a good buy-to-let property, then you can join my buy-to-let VIP list. And then my team will send you awesome buy-to-let properties every single day. Some of them are off market, some of them are open market, but just really unbelievable deals. So let me know. Again, email me, tom@soanegroup.co.uk, or you can comment below and we'll contact you, or you can message me through my Facebook page, my Twitter, my LinkedIn, my Instagram. Just send me a message somehow and we'll get the ball rolling. Hope you enjoyed that. Good luck. Let me know what you're doing in property. Are you going to invest or are you just a bit concerned? Are you waiting for prices to come down or are you a landlord worried about property prices? If you are, don't.